good afternoon, good evening, wherever you are in the world. I'm Ross Berlin, your host here and analyst at FXStreet. We're bringing you today an absolutely fantastic panel to help you guide your way through the elections and trade on the night. So without any further ado, I'd like to introduce our panel. We're starting here. We have Joseph Trevisani, a familiar face to you all, I'm sure, the regulars of FXStreet as an audience. Chief Market Strategist at WorldWideMarkets. Kathleen Brooks, I'm hosting you for the first time. Kathleen, thank you very much for joining us. Research Director for City Index. Ed Matts, founder of MatrixTrade.com with 20 years plus experience of trading in economics and politics. We have Mike Smithson, a writer and expert on betting on politics and founder of politicalbetting.com. And myself. So let's get cracking, guys, and jump into this. We've got a lot to get through. The idea is to, give some background of the situation of politics in the UK. It's been in complete disarray with Cameron stepping down after the surprise turnout of Brexiteers and PM May sort of goose-stepping her way in there. So maybe we could ask yourself, Mike, could you give us some background on that and bring us up to speed, please?
Well, the election was called about 7 weeks ago in quite exceptional circumstances because Theresa May had made it very clear she wanted to run the full term of the Parliament through 2020. And she wanted it because she wanted to increase her majority in order to help her, she said, in terms of the Brexit negotiations with the rest of the EU. Currently, the Conservatives have a majority of about 17 seats within the House of Commons, and they got that last time with about 6.6% lead overall vote share. She started the campaign brilliantly. The lead went into the 20s, got as high as 23%, and looked absolutely certain that we were heading for a landslide which would meet her objectives. What's happened, though, in the last 2.5 weeks is that somehow the wheels have come off the Conservative campaign. One poll out this morning has the lead down at 1%. Others have had it 3, 4, 5%. So it actually has suddenly become extremely very tight. And I should say that what happens is that people are elected to the House of Commons in individual constituencies. This is not decided by overall national vote shares.
And Ed, what's your take on that? Because, I mean, you've come around from a background and you know the ins and outs of how all this goes.
Well, I've had the fortune, or rather misfortune, to stand in these type of elections twice before, once in the Oxford University seat, and in fact, the time before last in Labour's most marginal seat, and somehow I managed to increase the Labour majority in both occasions, which is probably just as well because I love what I do now, so I can focus more on that. He's absolutely right. And Theresa May was absolutely right when she called the elections. It was a surprise because she was on record saying she wouldn't call it, for the simple reason that we as a country, as a nation in Britain, need to go into those negotiations in a strong position. And had she not called the election, we would have gone in 2020 fixed term election, and our EU negotiating counterparts would have known that she was working on a small majority, looking to increase that majority, being buffeted by the Conservative Party, the Remainers. Not all of them are Remainers, and buffeted also by the Eurosceptics on the right. And she would have been pulled left, right and centre, not just by her own party, but other parties seeking to take advantage of that. So as a nation in potential turmoil and certainly instability, we would have gone through those negotiations in a very difficult position and we would have been exploited. So what Theresa May has done is absolutely the right thing. She said, look, I need a majority, not just to, have the Theresa May domestic agenda rather than David Cameron's, but I need a majority in which to negotiate Britain's position. If she does get a reasonable large majority, then she'll be in a position to do that. However, if either she gets into a smaller majority than she's got now, or even a hung parliament, then not only is she in a much worse position, but as a nation, as a negotiating nation, will be stymied. And that is why, I mean, if you want to bring it back to markets, why something like dollar sterling will pivot on that vote swing. On the, not, as the gentleman said, it's not going to be on the percentage vote. It is how that translates into seats. As we've seen YouGov polls showing, even though the Tories were well ahead, there was still a possibility of a minority or even a minority government or even a hung parliament, even with a sizable lead. And that really comes down to the distribution of votes within the constituencies across the country.
Can I just jump in?
Go on. No, please do. Yeah.
Thanks, Ross. I was just going to say, obviously we have seen, every poll I think is saying that the Conservative lead has receded, certainly in the last couple of weeks. But, I would argue that this has probably been the most disparate polls that I've seen. I mean, for me, as working in the financial markets, I see the outcome as being quite unclear. We've got one poll, Survation, continually being quite downbeat on the Conservatives, but then we've got other polls that are still putting them at 6, 7, 12-point lead in some cases. How does that play out? Maybe that's a question for some of the other panelists.
Well,
is this unusual?
I was just going to say that there's two things this election is about. The first one, as the point I made, was not who governs, like the question was in 74, but how they govern. And so it's a question of the size of the Tory majority, effectively, if there is one. And the second one is where those votes go in the election. And what it really comes down to, forget the total percentage of polls or, what these polls are really saying, because we know from Brexit and the last general election that, quite frankly, polling in the UK is pretty weak compared to places like France. It seems very inaccurate. What this election is about in terms of voting is where the UKIP vote is going to go. And it's collapsed by probably about 8 percentage points. And the polling that we've seen so far, and it's not very detailed polling, but the polling we've seen so far about UKIP is that of that 8%, the Tory vote is going to go back Tory. But it's within the UKIP vote is where the Labour vote is going to go.
I disagree on that.
I disagree with that as well.
Yes, certainly the Conservatives will benefit from a large part of a significant part of the UKIP vote. But a lot of analysis was done after the local elections, which we had 4 weeks ago, which found that the Conservatives only got a marginal advantage in places where UKIP people had stood before and weren't standing. So I think people can overestimate the impact of UKIP's position.
But
Mike, such as what areas? Are we talking are we talking the northeast, or which were predominantly Labour?
Absolutely.
But given the... Yeah, okay.
That's it in a nutshell. Very good point. I mean, it's if you go for the first seats that are likely to come out in Sunderland, the UKIP vote is going to be very interesting to see what happens to either UKIP or BNP vote as to whether it goes back solidly to Labour and people, love Jeremy Corbyn, or whether it's, you go elsewhere and you've got questions like even the Liberal Democrats in the southwest or in the home counties, whether they're going to, they'll pick up some of the disenfranchised or the alienated Tory supporters who really want Remain. So there is a bit of flex, but as a whole, as a majority of vote of where the UKIP voters will go who were Conservative are likely to go back Conservative. I think the key is where the Labour, the previously alienated Labour voters who voted UKIP or BNP, whether they'll go back to Labour or whether they see the significance of Brexit as an election issue and will vote Tory as a consequence.
So I've got a point for Mike, actually. What about the people who voted Conservative, say in 2015, but they also voted to remain within the EU? Has any analysis been done about that cohort, whether or not they're just so horrified by Theresa May and her hard Brexit stance that they might push their vote somewhere? So actually, they may be very undecided, but they may decide, on Thursday that actually they can't vote for the Conservatives because of this threat of a hard Brexit.
Well, at the moment, we reckon there's about 27% of the Conservative vote consists of people who voted Remain at the election, and clearly that is difficult. But all the efforts that there have been to target them, particularly by the Liberal Democrats, so far don't seem to have succeeded, except in a number of key seats. So what we are seeing in southwest London, where the Liberal Democrats were wiped out in 2015, we see maybe 2-3 seats which possibly could could move to them. And this is so tight, this election, every single seat could make a huge difference. And that's why it's so up in the air.
Yeah, I mean, I might be... go on, Joseph.
As the only person here with a colonial accent, I probably have a little bit of a different view on this. I don't have the detail, but there are a couple of themes I think that I can see from this side that fit sort of the movements we've seen in Western politics, actually, across the last number of years. One, I wonder if the fall in Theresa May's polling, the conservative Tory polling, is something that is simply due to bad campaigning or a couple of missteps. This can happen. Or is there something else going on here, something else brewing? There has been, and we've seen it across in France, certainly in Britain in the Brexit vote, we have seen a general move, sort of a anti-status quo move, whoever the status quo is. At the moment, if you make a comparison between Theresa May and Jeremy Corbyn, Mr. Corbyn is the anti-status quo at the moment. So is he benefiting to some degree from this regardless of his politics? I can't say from here, but I think it's a question which may be accurate. In addition, large poll leads going into elections often never seem to quite hold up, especially when they're further back in time. So I think that's probably going on here as well. In addition, we have the technology, which is certainly true, the technological problem here for polling, which has certainly been true in the United States. It was true in Brexit. It probably plays a part in this election as well. It's becoming harder to poll accurately because you have different groups splitting in how you access them and how they actually respond. Yeah. And the last point I wanted to make is the country as a whole, less than a year ago, almost a year ago, did vote for Brexit, which was a surprise at the time. People who voted for Brexit, are they likely to change their vote by going with Labour right now? Again, some of these are questions really and observations.
I don't think Labour is the party of Remain either, to be quite honest. Certainly not under Corbyn. I mean, he's not a massive supporter of the European Union. I'd just throw that in there.
True. That's one reason. It's actually one reason why we got into this position in the first place, is because Jeremy Corbyn didn't, as a historic Brexiteer, did not, and the Tory and the Labour Party line was Remain. He was encumbered by having to promote the Remain case and didn't promote it, which is why the Labour vote, a large part of it, certainly in the north of the country, actually voted to Brexit.
But I think it's very easy to overestimate the impact of Brexit on this election. Inevitably, there's a whole series of other issues that get thrown up, particularly as we've seen two very nasty terrorist attacks, the one in Manchester and, of course, the one in London on Saturday night. And issues like, Theresa May was in charge as Home Secretary of policing for 5 years, and we suddenly see questions about the cuts in police numbers that took place under her watch, as it were. And she, of herself, she's not come over as being very good and very refined at answering questions. That's been one of the big aspects of the Conservative campaign. And I think that is part of the reason why she's actually slipped in the polls, that she's not moved on from to being able to do this. And I think the big problem with Theresa May is that she got the leadership almost by default. She never had to fight a leadership election. And if she'd had to do that, she would be much more proficient.
Can I ask a quick question, Ross? If you're talking, but I was just going to ask from all the panel, really, why, we seem that the financial markets seem to be incredibly resilient to political risk and to, risky candidates like Donald Trump, for example, in the US, candidates that are very anti-status quo. Emmanuel Macron, for example, he doesn't even have an MP in the French Parliament yet, but yet we are rallying post these elections. And I'm just interested to get, views on that. I have my own views, but I'd be interested to hear from the rest of the panel.
Well, I can speak to, all right, Joseph, for the United States, I think I can speak that Trump's policies, or his supposed policies, even most of them have not been enacted yet, are simply viewed as being good for business. It'll be anti-regulatory. I mean, it's kind of a basic Republican approach to government that resonates with the financial markets. I mean, the Obamacare legislation, whatever you think about its social impact, has acted as a drag on the economy, probably on job creation, and the same for the regulatory approach and their environmental approach in using regulations to promote their agenda. So that, I think, is kind of a basic view here in the United States about why the markets have been rallying on the Trump election.
Well, Trump was he was a risk trade to begin with, wasn't he? And then it was seen as a positive for the dollar with all the fiscal stimulus, and it became the Trump trade. And that, that could well transpire. I mean, if we were to have a Labour victory, we might see the same kind of reaction in markets.
I don't think that's simply not on a Labour victory. That no opinion poll has had Labour leading, none of them throughout the campaign. And they start from an extraordinarily difficult situation. There are 650 seats in the House of Commons, and Labour are left 99 seats behind. And to make gains on that level in order to win control just is improbable. I mean, the only options for this election are whether there is an hung parliament, which of all the instability that creates, or whether Theresa May gets a majority. Those are the only options.
May I offer a warning from across the Atlantic? There were no polls. I mean, I was on the desk and blogging and writing during the election, and just as a piece of enjoyment for an old FX trader, it was a ton of fun because no one expected this. And its responses in the market were astonishing. Part of the Trump trade was simply a carrying out of momentum. The market decided on a move the next day and has kept it up ever since. So I agree with you. I mean, the British system is more difficult to pull off the type of victory that Mr. Trump did. But never say never.
Can I ask why? Why is it more difficult? I mean, we have some of the factors we've got to bring in here. For instance, the EU referendum. If you were in London and you wanted to go out and vote, let's say to Remain, the weather was so atrocious, you might not have done so. All right, because you've only got a certain time slot. And the actual participation, I believe, in London was a lot lower than expected. So that's a factor. You've always got that risk. And looking at the weather at the moment, putting my weather cap on, it looks pretty dismal out there. But over this week.
But it's always
things like that.
Wait a minute. I thought it was always raining in Britain. So, I mean, how can that affect elections?
In fact, all the studies have shown that weather does not have an impact on elections, and there's been a lot of academic work done on that over the years. It's a nice one to talk about, but I don't think it has an impact.
Can I go back to the previous question as to why candidates, arguably riskier candidates like Macron or Trump or Corbyn, why if they're elected, why the markets seem to ignore that? One of the reasons, and thank goodness that's the case, is the machine of government. When you have someone who appears to have a radical agenda, as Donald Trump clearly has had and still has, when they get elected, the first thing that happens is the practicalities. I mean, in Donald Trump's case, you could argue some of that was rhetoric, and he would never going to be put into practice. Yeah. But the actual practicalities of government in the US is the constitutional framework that prevents someone like Donald Trump going it too hard alone, and the practicalities in the UK certainly also putting in, say, some of the Corbyn agenda, nationalisation, etc. And even talk about Macron. Mitterrand in France had the same problem back in 1980. Radical agenda comes in, the market's dump. He starts talking about what he can do and can't do. People realise he can't do his agenda, and so the markets recover. And as a consequence, it really, is one of the great things about the real economies and markets is to some extent they're immune, unless you get you get a North Korean leader, then the markets will continue and the economies will continue unless someone actually derails it. The interesting thing about if you go back to a political analogy, say with 1987, it's in the Times today. It's very interesting about how the politics was quite the same. There was a woman who's determined to do her own thing. You had a very left of centre leader, Neil Kinnock then, and now Jeremy Corbyn. You had a terrorist threat at the time. It was the IRA back then. And you had an NHS scare at the same time. Quite strong political analogies. And yet, Margaret Thatcher was the lady, and she came through with a thumping majority. So that was, a hard one to call, and UK pollsters obviously got it wrong back then. Another analogy with 1987, and those people who know me on Twitter or matrixtrade.com will know, I don't know if you can see, that's the 1920s, that's the 1980s, that's the 2010 stock markets. And we are actually following a very similar pattern to 1987 as well. So I find I wouldn't go so far to say, well, it's because we have Theresa May and she may be like Margaret Thatcher, but I do find the political analogy and the market analogy quite compelling at the same time. It's kind of interesting.
Well, what is more bullish for markets?
What, sorry?
What is more bullish? What is more bullish, a Tory or Labour? Surely it's Labour, is it not?
In the short term, it's the knee-jerk reaction is always
the end of austerity.
Yeah, no, the knee-jerk reaction
end of austerity and 25 billion pounds worth of money that will go into industry under Corbyn. That's got to be bullish for markets. It's the same as the Trump trade.
The first reaction of markets to a Labour victory is down, and then over time they'll the market. Your point is right. They'll pump money into the economy, and therefore you have not just possibly some real growth going in there because they're spending more money on the NHS, etc., but you'll have inflationary growth, which is part of the story or the anticipation of inflationary growth in the US. The markets will actually rally. As to whether that's sustainable under a Corbyn government, I would strongly question. But the opposite is the case with the Tories. People will say, oh, thank goodness, we've now got a Brexit situation, we can go ahead. Well, hang on, how different is this really? And then so the markets will get over euphoric, over enthusiastic, and they'll come back down as a consequence. So they're almost, as their politics are, they're almost diametrically opposite.
So have we made up our minds essentially that it's impossible for Labour to win this? Or are there any, I mean, if we bring in demographics, I mean, for the first time in a long time, we've seen a lot more of the 18 to 24-year-olds going out there registering to vote, whether they all make it out on the day to do it. Could that swing things at all?
I don't think that Labour have got any chance whatsoever. That's pretty I think that they've got a chance of increasing the number of seats. But they remember at the last general election, they got completely wiped out in Scotland. Scotland has 59 seats. They held 41 of them. They went into the last election 2 years ago, and they came out with a single seat. So they're in a total and appalling situation, and they're not going to make any progress coming back to seats in Scotland. So the chances of them actually getting the seats together so Corbyn can become PM really looks very, very slim indeed. That's my view.
Does anyone think that
No, carry on.
Does anyone think that there is a potential sort of anti-Brexit vote still lurking out there, and that Labour will benefit from this?
Yes. Dems are more likely to benefit.
I think you'll find an anti-Brexit vote in areas where there's sort of good education, people are well educated, where there's a high Remain area. You might see, I think the Conservatives might be in some trouble holding on to sort of places like Oxford. There's certainly some places, in the cities where that is likely. But in the rest of the country, no, that's not an issue.
I just want to respond very quickly to a question coming through from David Atherton, who's asking that he hopes we'll get to some actual conversation around trading sterling dollar soon. David, for you, we certainly will. This is what this forum is about. We just want to cover some of the the foundation to that, because I think there are some very important points here that we're covering. Because unlike 2015, where Sky News came out very, very quickly when the polls closed with the exit polls. Sterling rallied 250 points and then did nothing for the entire night. I think we're in a different situation this time around. So we're just going to get through some more of this.
Can I interrupt you there? There's one thing we do is actually look at history, how markets react to certain events. And I've actually got some slides if you want to show what dollar sterling, what FTSE does under a Labour government, a Labour victory, a minority Tory vote, and a majority Conservative vote. And you bear with me as I learn very quickly how to use Google Hangout.
In the meantime, we've got Martin Armstrong that's joined us. Are you with us, Martin?
Yes. How you doing?
Hey, how you doing, my friend? Very good. Very good. Martin, so we've covered quite a lot of ground around sort of UK politics and what we might expect as an outcome this time around. I think we've sort of swayed to the idea that Labour cannot win outright, but there are the risks of a hung parliament. Do you have any insight on that while we're just waiting to move across and transcend to the actual, trading the events and the outcomes for sterling?
Well, our computer is kind of unbiased, and it looks at things a little bit more on a longer term perspective. And basically what it's showing is it doesn't really change the longer term trend here, that this is really just an upside reaction. And longer term, I mean, we're looking at going down.
Sorry, Martin, you cut out?
Yeah, can you hear me now?
We can hear you now.
Okay. Basically, our computer is showing in a longer term perspective that the European economies, including you're looking at Britain, I mean, we're still in a longer term bear market. So, I mean, the pound has bounced technically right now, but it has major resistance, and so really at a culmination of real problem level across the globe. But so it doesn't really look like we're going to be looking at a change in long-term trend or something like that.
Just to very quickly then, guys, I don't know if you can see my screen. This is the price action in sterling dollar. Excuse me for my artistic bits and bobs. This is just for my guide only, really. But this is where we called for the EU referendum and Sunderland and the swing vote, which was a complete surprise to markets. And this was the post EU referendum low. The UK government was in complete disarray, but then that was cut down quite quickly. In fact, PM May came in and sort of stabilized that, and sterling got a bit of a rally. And then we had talk of a hard Brexit scenario in the Conservative conference. And then we had that scenario when China was out, overnight trading in Asia, very thin markets, and algos basically jumped on the idea of a hard Brexit, took us all the way down. Stabilized. We had some surprise data coming out from the UK economy, which sort of stabilized the pound, and we're sort of in that range there between 120 and 128, I believe. And now we're sort of in this scenario here in the new year when retail sales was coming up very strong, manufacturing was benefiting from a weaker pound, concerns of inflation, and the Bank of England needed to react and hike rates on the back of that. And then the Parliament called for the snap election. We got a rally here with the idea that the Conservatives were leading by a 20-point lead or thereabouts. And that, in effect, would have given May, as we discussed earlier, a better foundation for negotiating properly with the EU. So that's bringing us up to speed. And now I think, Ed, you're going to take us through some charts of your own. Well,
yeah. In fact, you've just described half the chart. I don't know if people can see what's the chart I've got up here. Can you see? If you look at the purple line, that's the current price action for the last 100 days going. This is that's the price action for the last 100 days, the purple line. And what we also have is what historically over the last it's going to be about 25 elections, what's happened under a Labour government, resulting Labour government. It's the red line. The white is the average. And the difference here, the really interesting difference, I think, is between the light blue, which is a Conservative win, which is not a majority win, and the dark blue, which is a Conservative majority win. Now, I don't know about you, but that's something I do. This is something we do all the time. But there's a very strong correlation between the purple line, Conservative majority. And what typically happens, you can see what happens here, is when there's a prospect of a Labour victory, as soon as the election's announced, the pound goes down because people are worried about a Labour government. And then as it eventually recovers with a Labour government. But with a potential Conservative majority, the first thing that happens when the election is announced, this is going back over, like 30 data sets, that the pound rallies with the prospect of greater stability, Tory government. And then towards the election, about 25 days before the election, it starts to go sideways. And lo and behold, look, this is amazing. It is tracking the Conservative majority average. And the interesting thing about this is actually saying that on the election, that we've done everything now, on the election where if, and this is saying that it would be, I don't know if it's going to be a Conservative majority, the pound rallies. It breaks to new highs. You have a euphoria, you have a sense of relief, and then whack, back down it goes within 24 hours to 5 days. And that decline is actually the buying opportunity on dollar sterling. Right. And this is the correlation between the Conservative majority and the price action over the last 100 days is quite stunning, quite frankly. And if you are, I don't know, I won't, want to hog the show or anything. If I just take you through very quickly, you can see something similar on FTSE, that it now stabilizes, consolidates into the election, and then as a result, it rallies, which is immediately counterintuitive given the last, what we've seen in the last, since Brexit itself, that sterling rallies on the euphoria of the election and then fades. FTSE rallies as well, which means basically FTSE in dollars. Hello. But in fact is, although it's not like the cable, it's like a 24-hour spike. This, in fact, goes on for 2 weeks and then sells off. There's other charts, but I won't want to hog the show. So I think history is telling us something quite interesting about, not necessarily about the politics and actually what happens, but what is the markets are doing, what they're anticipating now and what they're trading now is exactly what they've done time and time again, particularly under a Conservative majority. So why would it be any different? And what is really interesting, if you go into the election itself, and talking about some of these movements of poll, if you look at what happened in Brexit, how the market reacted immediately to the first poll that came out in Sunderland. But if you look, that's because obviously there's a simple plus 50%, for Brexit. But if you look at two things, one is if you look at and this is one thing we'll be doing into the election night itself, is if you look at the distribution of votes of the first person who's called, or particularly the Tory vote, you'll see the percentage shift. So you don't need to wait to see the returning officer say, well, therefore it's a Labour victory, and for the pundits to tell you what the swing is. You can work it out yourself and know the likely reaction of cable to the result. In fact, one thing I will say about Brexit, and then I'll shut up for a bit, was what was amazing about Brexit is the market waited to the returning officer said, therefore Brexit wins this seat. Whereas in fact, you could have worked it out as soon as he said 3%, you could have gone yours on cable, you would have hit a bid, and then by the time he finished, it was 3 cents lower. I'm just flabbergasted how that would ever happen. But if it happens again this election, we'll be there. Anyway, I'll shut up now.
Kathleen, do you have anything, any tips for trading the event?
I think, what's been quite interesting is that volatility has obviously been quite subdued. I've got a couple of charts, so I will just try and share them with you guys, if that's all right.
Mm-hmm.
Here we go. Right. So the first one, this is just a 1 week risk reversal. So risk reversal is linked to the options market, to volatility in the options market. And for FX, risk reversals are a really good kind of sentiment indicator. So here it suggests that there is a bit of a loading up of some short positions in a short-term positions. So we're loading up in short-term puts ahead of this election result for cable, but it's nowhere near the level that we were at after the Brexit vote. And that to me just suggests that this election really isn't going to have the same impact on sterling as the EU referendum did last year. And actually, it could suggest that we may continue to see, the continuation of trends. I liked what Ed just mentioned there about the fact that we could continue to rally into this, a Tory majority vote. That's certainly what the market seems to be doing. And again, this short-term risk reversal chart really highlights the fact that that the markets are expecting a Tory majority, in my view. And that's the other chart I was going to show you here is, hopefully you can still all see it. This is sterling yen. Sterling yen has got the highest volatility out of all the cable pairs leading up to this election. And I know you may not be able to see it. I might just try and make that a little bit bigger. There we go. What you can see is this is some Fibonacci analysis. This is from the early June 2016 high down to the October low. So that dip in October when Theresa May threatened a hard Brexit. We did try and recover and break that 61.8% level, but that is a massive, massive level of resistance there. That's coming in around about that 147.75-ish level. And we've actually fallen through the 50% Fibonacci retracement there as well, sitting quite nicely on the 100-day moving average. But one area I would say that if we get that Conservative majority, that initial knee-jerk reaction higher in sterling, we could really see sterling yen bounce and get back to that 80 level, that 61.8% retracement of that June 2016 to October decline. So again, I won't hold the show now, and I will pass it back to somebody else.
This is Joseph. I think one of the things we've seen is that the markets are tending to ignore the Brexit ramifications. We get news, we're going to get this hard Brexit, we're going to get this, we're going to get that. The Europeans are putting forth either a negotiating position or something they really believe in. Nobody's really sure. I'm sure the Europeans know, or maybe they don't know. But the markets have been ignoring most of these developments. It's a long play out, and I think that the view of the markets is that over time, the necessities of economic reality between the continent, the EU, and Britain will assert themselves regardless of all these political positioning right now. And that's what we're seeing in the levels of all the markets. We're seeing it here in the United States, where the Dow is at an all-time high or very close to it. And we're seeing it in Britain with the FTSE as well. So the markets are taking a very different judgment. Maybe they're becoming jaundiced with the continual non-eventful, really, rhetoric that's coming out of both sides, and they're taking their own view of where the situation's going to go. In the long run, I think it probably will be a more accurate view than the political rhetoric.
Can I add something to that a moment, Joseph? I believe that the markets haven't really reacted to it, certainly not to the Brexit thing, because markets react to news, and there actually hasn't been any news. The negotiations between the EU and the UK have been suspended. They are expected to start again on the 19th of June, but I don't believe they're going to start with any gusto until we get the German election over in September. So I think there's been a lack of new news to actually move markets. So that's why, I think that we've been able to, rally so well over the last few months.
Well, thank goodness. Because one thing this month we've seen in the last year, I've been trading for over 20 years, and I've never known a market that's been so event-driven. Not just event-driven that an event that may have longer-term consequences, but where volatility is suppressed or compressed to the event itself. And that, you have huge funds that are doing their own private polls, looking for an outcome, position accordingly, get stuff, throw large amounts in the money, people get buried left, right, and centre, acute volatility. And at the end of the day, Joseph's point, it's like the Trump election. What happened? 2032 S&P, and now it's at 2412. And shortly after, when the S&P opened the next day, it was back to the same level it was, it started at. So the difficulty from a trading perspective is judging the element of risk that you're taking. And with something like the jump event, you could gauge the type of scale of reaction. But with this election, because it's not directly about Brexit, it's much harder to gauge the volatility. If Theresa May lands a 50-plus majority, then you expect cable and FTSE to go higher. But the question is, to what extent? You'd be looking at people buying above 130.45, the recent high, which was also a fibber. For what? A big figure, two big figures, 4, 5, what? And you see that the point is that the market will reduce their risk into the election, and then when they announce, what the election result is, they'll go in. And it's the scale of the buying that will determine the scale of the spike. And the most important thing to look out for on that is not what punters like you, me, and everyone else is doing, but it's what the corporates are doing, what the actual real money is doing. Are they going to go in after Theresa May is elected, when we have Brexit, the unknown, coming in the next 18 months or so? Are they going to say, well, thank goodness for that, UK risk is now settled like they did with France? No, they're not. So you're going to see punters go and get themselves long and wrong, mind, and then the next day you'll find you'll find some of the longer term funds, and you'll find the corporate saying, well, thank you, at 132.60 cable, I'll have some of that, and then it'll go back down. And that's the difference is understanding the nature of the volatility. Sorry?
Can I
natural trading rhythm?
Can I come in on just one point that's important for the night? That UK exit polls have got a very good reputation for getting it pretty right. And that will come out at 10 p.m. British summertime, and literally within seconds, that is almost likely to tell us who's won this election or not. And that will be the trigger. The exit poll is a massive exercise. All the networks combined together with leading academics and all of this, and actual real voters are every 10th voter at particular polling stations are asked to fill in a second ballot, and that goes in a ballot box. So it's all done in a very proper and good way, and it's got a fantastic reputation. The exit poll, 10 p.m. British time on Thursday evening, that will tell us what's happened.
Yes, yes and no. I mean, not necessarily, because it might be such a close race, and you may find that you need to trade every single council throughout the night. And in fact, there's a nice document here which basically at the end of this we will send out a video of a recording, and I'll see if I'll ask our team whether I can attach this document. Let me try and find it and share my screen. This will help you trade throughout the night. If the exit polls are not clear outright, and I don't know whether I can do this, then this might be a useful. You can find it at election.pressassociation.com, Declaration Times General. And this is essentially all the timings of the various councils. And then if you combine that, Bloomberg have done a very good previous election campaigns. And there's a document there which I'll also share later on with you guys and send it out to our audience. And it will give you sort of the important key areas. So we touched on it earlier, the Northeast and the swing between Labour and Conservatives there. And if you want to monitor those, and these are all the timings, and that might be a useful document to have. Polls are not giving a clear outright winner.
Yeah, there's one thing. Go ahead.
Well, one thing I wanted to ask everyone was, Martin, go ahead. Martin, go.
I've been on the phone with quite a few different major institutions and corporates, both on the continent and in Britain. And the interesting thing is that those that were against Brexit in Britain have flipped their view. They're going, this is pretty good. Sales have gone up. We've done really much better. So I've seen the sentiment change in the big money a lot in Britain already. Now in Europe, there's something you're not really talking about here, is that proposal to effectively create a European bond, which is really an ABS. And what is being talked about behind the curtain here is that that's really a bailout for the ECB. They're trying to come up with something because the ECB is absolutely, it's got like 40% of the sovereign debt, and it stops.
I think that bond issue is actually really interesting because
it's sending shivers down the spines of everybody, all the big money that we tend to talk to. Everybody's asking that question. So I really think you're probably going to see, from a British standpoint, the British pound is still, like the Swissy to some degree, a hedge against the euro. So the euro is picking up right now. There's major resistance in the pound at around 134. I mean, it might be a selling opportunity at that point, but just keep in mind of the dynamics of what's going on in the ECB and continental Europe.
Can I butt in? There's a couple of important points. One is how is you talk about the dynamics of the market. Is that obviously after last June, Brexit meant sterling weakness. One of the preconditions we saw of a potential sterling bottom was for that to invert. And when Theresa May stood up and made her Brexit speech, the 12-point speech in January, sterling started rallying on greater Brexit uncertainty, on greater Brexit certainty, if you like. As a consequence, now, whenever there's any uncertainty about the Brexit process, sterling falls. If what that implies is the potential for sterling to go higher longer term with Brexit, because ultimately the UK may do something well out of it, where if there's any uncertainty about Brexit, the pound will fall. So that's quite an important change in the dynamic. And the other very important point you make is that we're an island, maybe, but sterling and Brexit is not an isolated event. You know, you can see the potential for a sterling rally because of Brexit or not. But if something happens, in tomorrow, a couple of days' time, if Comey comes out and says something that's damning to the Trump administration, forget Brexit, the dollar will move on US-related matters, or whether it's the ECB, Europe, or Bank of Japan and iron ore in China or whatever else. So it's just one part of a much larger jigsaw. It might have the Brexit stamp on it for 2 days. It might have the Comey stamp it for 2 days. And it's a question of the longer term trends. So if you want to identify a trend as a result of Brexit, you need to strip out some of the more volatile elements like the dollar. So euro sterling or sterling yen, for example. It's not just a simple Brexit equation. I'm
not necessarily sure that the pound is actually falling on greater Brexit uncertainty necessarily at the moment.
Well, with respect, as soon as the polls turned for a hung parliament,
it was a very small decline.
Sorry?
200 pips. I would say that it was range bound, actually. In my view, in what we've seen in the past in politics and the pound, I thought that was quite a muted response from Cable.
Well, with respect, depends how big your chart is, quite frankly. For a 300-point move in the space of 48 hours to some people would be, Of
course, of course I'm aware of that. But I'm just saying that I think that, compared to how we've seen it move in the past on uncertainty, I thought that was relatively muted.
It's interesting. Here in the States, Mr. Trump's, our president's policies and their status in Congress is having some effect. It's interesting, it's having more effect on the dollar than it is on the equities. The healthcare bill is either stalled or it's not doing anything at the moment. That's something that was viewed rather importantly. There is no tax plans out there that are actually being acted upon in Congress. And the dollar has suffered from that a bit, whereas the equities have not. The equities are having a great old time. For whatever reason, they are taking the view that the U.S. economy is going to improve under Trump, regardless of what happens. Now, the dollar is being a lot less sanguine about that, about some of the ramifications. So I think the currencies are a bit more susceptible to this type of political movement than the equities are. And certainly it's true here in the United States right now. I think we may have lost Ross. One thing about Hangouts, it's a good program, but it tends to be a little dicey. So I'll help Ross out. I remember that I was in London during the election of John Major, surprise election of John Major, and I was old enough to consider what I was voting at. The city was overjoyed. I was in London. The city was overjoyed that Major won, and they didn't expect it. Is the city vote, and the reason I'm asking this is because I'm wondering about the potential for more surprise on the Labour side than any of us really anticipate. The city vote this time, it seems to me, would be a little split. They would want, if there's an anti-Brexit vote, they would want to participate in that, yet they're historically Tory. Does anyone think that this will have any effect on the election, the city being a pretty strong Tory stanchion, place for their votes?
I think this election is different to many others in that respect, because it's not just about what a Labour or Tory government would do as far as the economy is concerned. We're talking about Brexit. And therefore, we're talking about issues like UK passporting, which is the massive issue for the city. And as a result, if you get Corbyn in and he has a totally different stance to a hard Brexit, causes problems for UK passporting. So possibly for the city, they would actually want a muted single market approach that a hung parliament or a national government or whatever you want to call it actually is more likely to bring about UK passporting for city institutions in Europe than a hard Brexit, which is no single market and could actually make some of the city institutions, the London city institutions, vulnerable, unless you're HSBC and you've already gone. So there's you've got to assess the nature of the risk, whether it's a Brexit risk or an economy risk. But we have a couple, and we have a lady from the city itself. So perhaps you want to ask her.
Kathleen.
Yeah, I mean, I think there's a couple of things. I mean, firstly, we've got these new MiFID rules actually coming out even before Brexit happens. So, it's going to be, rules around kind of passporting and how we can trade financially with Europe are changing pre-Brexit because the European Union are already changing their rules. So we need to have the decision on that, which I think is coming up quite shortly, actually. We're obviously a derivatives trader, so it's all important for us. We've got so much regulatory change and we deal with it all the time, being both in the EU and there's going to be just more of the same really outside of the EU. I would say that the burden there, we already have a burden.
From a financial point of view, from a financial markets point of view, London is the world capital and has been for 100 years. You have seen, and I have seen, a lot of commentary how the international corporations, banks, others will be moving their operations or considering moving their operations to the continent because England is separating, or UK is separating from the economic institutions of the continent and the EU and the ECB. Now, I've never really bought this as an idea. Does anyone have, because I just don't see international banks and international corporations choosing to operate under Brussels regulations rather than under British regulations. Does anyone have an opinion on this one as to whether this is a real threat to the institutions and the financial status of the city?
Well, perhaps you want to ask Stuart Gulliver, CEO of HSBC, that question, because he's just moving a large part of the bank to Paris. So there's your answer, in my opinion.
Maybe I don't know the man. Maybe he just prefers Paris. I mean, it is a possibility.
Yeah.
Well, as a man who spent a long time in Singapore, Hong Kong,
there are a lot of very decisions made in boardrooms. And
so we didn't hear that. It didn't come through.
A real mess a long time ago, and that was in Germany, and it was over the British pound not going to be in the EU, and they went and shorted it, and they ended up losing about $1 billion on that short position, and it resulted in the companies having to merge to hide it.
Yeah, I mean, I think London retains its global role and particularly its role as a finance system vis-a-vis the continent. I don't think that changes very much, but that's the view from this side here. Ross, welcome back.
What did I miss? All the good stuff.
Yeah, we now know the re-election result while you were gone, and now know what's going to happen next 3 months. And I'm afraid you're going to have to listen to the recording.
Now, one of the major issues that a lot of people are not talking about is they're concerned very much about the continent and Britain, and with the bail-ins, etc., and what happens. I mean, this is a lot of the part of Brit exit negotiations behind the curtain. People, very a lot of this, and then you have in the EU, they actually think they want to outlaw short selling, and that will support a currency. And they have no clue that you do that, and then you just get a complete, wipeout. That's it. There's nobody to buy the falling knife at all. I think,
if you want to kind of bring it to a focal point, there are three, if you like, three timeframes, in fact, regarding the election, as well as three concepts. One is the election itself and how the votes go and what, it says about the outcome and how the market reacts immediately. And the point I made earlier and a few other people made, it depends on how the flows around that as to where it'll go. The second one is going to be, if you like, jumping ahead, it's going to be the longer term implications of whatever result. And therefore, how people will want to position themselves regard the UK, whether they want to be invested there, whether it's HSBC, whoever, or not. And then you've got this interregnum during the negotiations. That would be really interesting to see whether people will use the election as an opportunity to take an investment decision that they put off. The likelihood isn't, and that they'll wait until we've got a much clearer idea about Brexit. So the problem about the election is its immediate volatility, but probably doesn't affect a lot in the longer term until we have Brexit. And then you have a whole period of 18 months or so where a lot of people have been holding off, a lot of them funds, a lot of potential investors have been holding off investing in this country, in Britain, to have the certainty. And are there anything about this election that's going to make their mind up? Is there anything about Brexit that'll make their mind up? I think for sure. But until it happens, then anything this election really gives, going back to the point about whoever is elected, doesn't make a lot of difference at the end of the day. So maybe 300, 400, 500 pips cable, back you go to the same level.
Well, I think if you just look at long-term charts, markets have a very interesting way of forecasting things. What is the high in the CAC 40? 1999. That says it all.
The Brexit negotiations are going to be so drawn out and so detailed that I think you're going to see a real glazing over of the markets, and they're simply going to have to come up, and I think it's happened already, with a view outside of the details and the day-to-day machinations of both politics and the negotiations once they get started. It's going to be almost impossible for markets, currency or equities or bond markets, to respond to developments in the Brexit negotiations, just kind of the nature of this whole process. And so I think we're seeing and have seen, as Martin says, the long-term view, I think, of the markets is already telling us, sort of in a preliminary fashion, where this is going to go and where the markets are going to go, that in a long run, I think the markets are going to view this in a positive fashion and have so far.
I think the other thing that people really have to understand, I mean, I've been called into China, into 1987, to the Brady Commission, etc. When you get called in, and you're dealing with these people that are supposed to be in power. You're dealing with, honestly, with people that are almost like kindergarten. 2007, a question I was asked from the House Banking Committee. Why did Lehman and Bear fall in 24 hours? I said, repo. They said, what's that? I said, what you regulate? You can't make up this stuff. People think that these people in power are so knowledgeable. They know nothing of what everybody here is even talking about.
Right, and that's why I think markets will have a separate view. It's just a necessity.
It's the market that really decide things. Not these political pundits who have no clue about what they're talking about.
Ross,
when I was called to the Brady Commission, they were actually saying, "Oh, well, we're going to find the person that shorted this market." And I just said, listen, I said, every investigation since 1907 began that way. You never found anybody. And they go, well, what makes it go down? I said, very simple. There's no bid. He says, well, what do you mean? I said, everybody's long. Something comes in, scares them. They go to sell. And guess what? There's no bid. So it falls like 1,000 points. I mean, and then these people want to outlaw short selling because they think it's some big player. They are just clueless.
Ross.
Yes, sir.
It's 4 o'clock. I'm afraid that's the time. I turn into a pumpkin.
Matt, you've got to speak up for the politicians.
Well, exactly. At 4 o'clock at the stroke of 12, I turn into a pumpkin, but this time I want the Cinderella, Theresa May, to go to the ball. So I've got to go, guys. And I wish you all well. Wish everyone well through the elections. And for the sake of this country, I hope sincerely, whatever the result is, that it's a strong result one way or the other, because a mixed bag ain't good for anyone. So I've got to shoot, but thank you very much.
And I don't think that's going to happen.
So thanks, guys. I've got to shoot.
Bye.
Okay,
Yes,
thank you very much for joining us. So,
Great.
guys,
I am going to have to go as well. Thank you, Ross.
Thank you.
yeah, we're wrapping up nice. Thank you very much for joining us, guys. To the audience, there will be a video of this put out very, very shortly. So check that out. And once again, thank you all for joining us.
Thank you.
Thank you very much.
I enjoyed it. Thank you.
Nice seeing you again.
Cheers.
Cheers, guys.